Welcome to Cheques and Balances. I'm Michael Vincent. This is James Blair. And this week, gold.
So, Michael, we've got another listener question, which, as I say, highlight of my day. Some might say it's a sad day, but for me, it's a big deal, and we really appreciate them coming through. The question came through via YouTube in the comment section. Those comment sections, you got to be careful in, Mike. It can be as ruthless as a Reddit forum at times.
I do.
But the listener question this week is: you've never spoken about gold. You've spoken about investing in property. You've spoken about investing into the share market. So we're going to talk about a whole bunch of different things. But where does gold sit? Is it a good investment? So today we're going to talk about different types of precious metals you can invest into, the historical performance, the pros and cons, and then our thoughts. And then I'm going to try and keep Mike not going on too much of a rant throughout, because I've never met Mike and see Mike not have an opinion on something. So he's already told me he's ready to go.
I do have an opinion on gold. And you know why I have an opinion on gold? It's because every time we start this chat with someone, or someone starts this chat with us, inevitably they end up at this point of, we should just scrap all money and replace it with gold, and I want to gouge my eyes out.
Yeah. There's some conspiracy theories in there for sure. Yeah. Hey man, it's all coming to an end.
Here's the thing. I'm going to do it. I'm going to go on the rant now. I don't even care. Here's the thing. If it does all come to an end and you've got this pile of gold, what good is it? A lump of gold, being stuck on a desert island with a lump of gold, is equally as bad as being stuck on a desert island with a lump of cash. It is only the intrinsic value that people give it that means it's valuable. There is no real value to gold. It's just a soft, shiny metal. There you go.
That's the podcast. Look forward to seeing you.
All right. But that's it. It's just this, like, the people, and I know we're not talking about the gold back currency or gold standard or anything like that, but inevitably this is where people end up with me, is they end up asking me about it, and they say, we should back our currency with gold or revert to using gold as currency because fiat money isn't real, and blah 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 and all this sort of thing. And gold, the only real value of gold is that people believe it has value. Absolutely, there are some practical applications for it, but those practical applications aren't so much that give it any sort of real meaning or underlying fundamentals as to why it's worth so much.
But there are other assets where you could argue the same point that
I'm not saying there aren't other assets. I'm just saying that no one's saying that we should replace our currency with Tesla stocks, right? Yeah. We should go to the Tesla back standard.
I think I read that in a Reddit forum. That was a suggestion.
Okay, it's enough of my rant though. Let's get into the
Tesla stocks and Ina Shinu. I think is that what it's called. So anyway, getting onto it. So precious metals are thought to be, by some people, a good portfolio diversifier. So as part of a wider strategy, gold might be a good idea, a good hedge against inflation. There's also other metals apart from gold. We'll refer to gold a lot, but there's silver, there's platinum. I've got one here that Mitch has written down that I can't even say. Palladium.
Yeah.
Jeepers, can't even say it. That's how much I know about palladium. So there's a few different options, but for the sake of today, we'll talk about gold specifically. Now, there's a few different ways you can own gold. You can have it owned physically or electronically. Now there's ETFs and mutual funds, and obviously you can own mining company stocks that are mining gold as well. The historical performance of gold is quite interesting, Mike. I did a bit of research. Statman is back. You took my thunder last week. That will not stand this week. So since 1970, gold has delivered a 5,333% return from 1970 to 2020, so 50 odd years. The S&P 500, which is the top 500 companies in the US, has only delivered a mere 3,733% return, which you might go, well, let's go all in on gold with my additional 1,666% return.
Yeah, I mean, pretty wild numbers. But I think at the end of the day, it's going to come down to what are the no one invests for that long. So give me some more focused stats.
Yeah, the caveat with those returns, especially with gold's 5,333% return since 1970, is a very large portion of that return was between 1970 and 1980, most likely to do with the hairy chests and thick gold chains that were going on. I also think it was the rise of the West Indian cricket team, and they had to have at least 17 pounds of gold around their neck.
And still managed to bowl at a pretty quick clip.
Yeah, you ever seen Courtney Ambrose's gold chain? Those tracks would be huge. So the returns over a long period of time look quite good, but they're quite over quite a short period of time, as kind of for a few specific reasons. Over shorter periods of time, though, over the last couple of decades, gold has done a 5.2% return annualized, while the S&P 500 has doubled that at 10.4%. And then over the last 12 months, gold has gone backwards about 16% versus the S&P 500 that's gone forward about 34%. So, and we can talk a little bit about the pros and cons and that sort of thing, but gold as an asset over a long period of time looks really good, a little bit deceiving because of the returns. When you look at it over the last couple of decades, which is a pretty long period of time, just on a return perspective, the S&P 500 has outperformed gold.
Yeah, and I think that's a sort of leads us to the point where both James and I get people asking us, probably James more so, but a lot of people asking us, should they invest in gold? And I think, James, you definitely get this a lot more than I do, but the response is it's usually people want to buy gold and sort of have it and own it and hold it. What do you usually tell people, James?
I sigh first. I go, oh, and kind of like, just why are we doing this?
Yeah.
I like to keep things simple, and I think part of human nature is if you're not doing something, you feel like you're going backwards. But if you have a good diversified index fund, you've got some investment property, you're paying down your debt, you're good with your budget, and you got your KiwiSaver, that's a really good strategy. Now, when your portfolio builds to a large size, say more than $250,000 in investment assets outside of property, that might be when you introduce an alternative asset, which performs a little bit different to the share market. One of the reasons for that is when the share market drops, people become conservative and tend to move towards gold. So that can kind of make the lows less low in a bad market. But for the majority of people I talk to, I say, there's no particular benefit to this. This is just you making an emotional decision. Let's stick to the financial plan.
Yeah, and that's a really good point, is that people want to be actively doing things and actively seeking out different investment options to try and get themselves ahead and get some more return. And like James alluded to there, quite often that's an emotional decision over a logical decision or something based on fundamentals. And that actually, if you stick to the fundamentals of building your portfolio in a diversified manner, probably going to get a better outcome.
Yeah. So if we talk about some of the pros of precious metals, I think one is an inflation hedge and also not having to worry too much about currency. So if you're investing in the S&P 500, depending on how you hedge it, but for most people, you're typically also experiencing the currency movement. Well, if you're holding gold, it's an inflation hedge and it's gold. It's not like a US dollar or a NZ dollar or something like that. The other one, as I mentioned, is the portfolio diversification. So one really interesting thing is historically bonds have been a good diversifier in a portfolio. The problem now with bonds is interest rates are so low that if interest rates start to move while the share market was down, your bond portfolio might go backwards. So there's another real big benefit in holding gold is people are now going to gold for returns because it will continue to be an asset that people will hold in periods of uncertainty.
Yeah, no, absolutely. And I think so. I guess can I dive into the cons?
One more pro for you is probably the increasing demand as the population grows and the supply constraints as well. So there's always going to be a limitation of the amount of gold. And then in addition to that, with some precious metals, there's some use in terms of industrial use, electricity, those kind of things.
Yeah, cool. Can I dive into the cons yet?
Yes, you can, Michael.
Okay, cool. Right. So it is not going to give you an income or return like earnings from a share or dividend payments from a bond or something like that. It is just going to sit there and do nothing. It is purely speculative. There is no innovations being made in gold apart from mining gold. And I'll get onto mining gold in a little bit as well, that are going to mean that this year's gold is significantly better than last year's gold. It's purely a speculative asset there. The storage of physical metals requires a cost. I know this because I actually own gold despite all of this. I don't own gold because I was interested in gold. I was doing some work with GoldX, a company that does online gold trading, and I thought I'd test out the product. And right now my gold has just been sitting there eaten away by these vaulting costs and these storage costs. So there is a cost to this that you potentially aren't going to get with something like shares and that sort of thing. You can't really derive any sort of passive income off this. You're going to need to sell your gold to realize the any funds or return from it. And then the last one I'm going to talk about, because we've already talked about the returns over a long period of time and a shorter period of time as well, is the environmental cost of digging up gold may not suit everyone's investment strategy. There is a reasonably large negative environmental footprint that is left by the gold mining industry. And also there's some human rights things that go along with that as well. So if you are looking for an ethical investment, gold potentially not the one for you.
Yeah, that's a really good point, Mike, that I'm disappointed in myself that it's not in the notes around the environmental piece. Really, really valid these days that that should be taken into consideration for some investors when making decisions.
Yeah, and I think it's a funny thing, right? So because there are shows on TV, like on Discovery Channel, where they're mining gold and they're doing this and they're doing that, and you look at these huge pits they're digging up, and you're like, oh man, that is that's pretty pretty big scar. And then you realize that actually these guys just are a fraction of the gold industry, and that actually the really big players are doing like significantly more damage. Especially the undersea mining where they're just sucking up the sea floor and mining gold. Like there is a really large sort of footprint that it leaves. So yeah, that's definitely something to consider as well.
Yeah. One of the reasons why I bought Hannah's engagement ring as a what is it called? A man-made diamond, because it's better for the environment. Also a lot cheaper, Michael. But hey, look into that if you're thinking about dropping the knee anytime soon.
Yeah.
So there's some pros and cons. There's definitely some pros, and I think Michael's point around it's doing nothing is probably not fair. There is some sort of capital gain over time, but definitely speculative, hard to invest in things when they're not paying you an income. It's going to be one of those kind of things that people want to go to in periods of uncertainty. If you've got a wider portfolio, yes, it can make sense as an alternative asset that's doing something a little bit different, introducing something a little bit unique to your portfolio. But I'd say for the large majority of investors, that kind of, as I said, that human instinct to, I want to do something, this is feeling a little bit boring. The way to grow wealth is to get rich slowly, paying down your own mortgage, managing your budget well, looking at an investment property if you've got the equity, regularly contributing to an index fund, having your KiwiSaver, making an active choice. Could gold be part of that? If you really wanted to, But for most investors, I feel like unnecessary complication in your financial position.
Yeah.
So we're going to wrap it up there. Thank you very much for joining us this week. Please make sure to subscribe on YouTube, leave us a review on Apple, send through a question if you have one. We love listener questions, and we will see you next week.
Cheers.